Hi all, welcome back again to Invesfinc on this Tuesday morning. On Monday, all the major Indian indices opened gap up and started sulking from the very first candle, which was the high of the day. Now in today's video, we will explore whether this uptrend is expected to continue or fade away, with the key support and resistance zones for Nifty, Sensex, Banknifty and FINNIFTY indices. We will also dive into the stocks that made headlines on Monday, so stick with us to the very end for our exclusive analysis on whether their momentum can continue and how you might approach them in today's trade. Before we jump on to the details, please go through the disclaimer. Now let's begin with the analysis on the indices. First up, Nifty 50. So as you could see over here, there was a sell-off that came at a higher levels. So we approached around 25,670 levels, and from the sell-off continued, and we hit the low of around 25,473, only to recover around 50 to 40 points from there. But roughly we closed 120 points down in yesterday's trade with 0.47% drop. So overall, this could be considered as a sell-off at the higher levels. Now, if in today's trading session we continue to maybe gap down and then or maybe open gap up and then continue with the sell off, then there are high probabilities that we would approach towards these levels around 25,250 levels, which is going to be the decider whether we can reverse from this zone if the buying emerges at the lower level at 25,250, else if we are headed towards the sell off, which would continue towards 25,000 levels in the coming day. So overall, as long as we do not cross the high of yesterday's trade, that is 25,669, no major long should be taken. And if we start trading below 25,250, then shorts can be initiated. So this is how we see the expected trend to continue from here on Nifty. Let's see open interest. So open interest alone in yesterday's trade, there have been significant call writing that had happened at every 100 points. So if you see at 25,500, 600, 700, 800, 900 and even until 26,000 and beyond, there is significant sell-off that got added in yesterday's trade. So this suggests that the sellers are quite optimistic that they can hold on Nifty to not trade above 25,500 levels. And at the same time, we could see the put writers have unwinded their positions even 500 points below strike. So 25,000 strike we see unwinding happening, 25,300, 250, 350, 400, all the strikes from 25,000 till 25,500, the unwinding in the put writing has happened. So this suggests that the bearishness or weakness is expected to continue once Nifty starts trading in this particular zone from 25,000 to 25,500. So overall, there is a strength from the call writers and the weakness is emerging from the put writers. So PCR stands at 0.6, which is not at all great. At the money, PCR is also trading at 0.7. High possibilities that the sell-off might continue even in today's trading session. On Sensex, so Sensex in fact was weaker than the Nifty. It opened exactly at the same levels as of yesterday, and then from the very first candle the sell-off continued. So we hit the high of 84,100 and then ultimately closed 452 points down at 83,606 levels. So as we mentioned that Sensex was much weaker than Nifty, so there was a drop of around 5.54%. Now in today's trading session, if we open flat or gap down, we should at least sustain 83,000 levels. So if we see reversal happening at 83,000 levels and then we approach towards 84,000 back, then that should be the sign of positive momentum to continue hereafter. Else, if we start trading below 83,000, then long position should be cut down, and we should look for opportunities on short side. So overall, even at Sensex, there has to be a cautious approach that should be taken at around 83,000 levels. On open interest, though, we have some strength at 83,500 from the put writers. So this would act as a support for us. And again, round level 83,000, we would see a significant support being taken at those levels. At 84,000 levels, we have huge call writing that had happened in yesterday's trading session. Then further at 84,500 as well as at 85,000. So today being the expiry for Sensex, we might not maybe cross 84,000 levels in today's trading session. So the key support zones are going to come at around 83,500 levels. So overall, this is how the choppiness is expected to be there in the range of 83,500 to 84,000 in today's trading session as part of weekly expiry. PCR is 0.9, which is comparatively good and positive. At the money, PCR is 0.7, which is slightly bullish. Moving on to Bank Nifty. Bank Nifty was quite positive compared to the Nifty as well as Sensex index. That is the reason we just closed 131 points down, roughly around 0.23% in yesterday's trading session. So overall, banking sector or banking stocks have been taking a support, and then this support would help even Nifty to trade at the higher levels. Now for us, the key resistance is going to be yesterday's high, that is 57,614 levels. If in today's trading session we cross above that, then longs can be initiated for next level around 58,200 levels. On the lower side, around 56,800 would act as a stiff support for us. If you see Bank Nifty starting to trade below 56,800, then long should be cut down and we should look for opportunities in short positions. From the perspective of open interest, so at 57,000 levels we see good support from the put writers, and then 56,000 levels act as a crucial zone, a decider zone for Bank Nifty. If you see Bank Nifty for any reason starting to trade below 56,000 levels, then all the longs should be cut down. This is a kind of short-term support that we are expecting on Bank Nifty. On the higher side, we do not see any significant or major resistances. So if at all any positive news emerges on the banking stocks, we will head towards 58,500 very easily. So overall, PCR stands at 0.1, which is quite bullish. At the money, PCR also is trading at 1.1, which is positive. Lastly, FINNIFTY. So FINNIFTY compared to all the indices was underperformer in today's trading session. So there was a huge sell-off that came in at the day's open, and this continued throughout the day. So we hit the low of around 27,117 levels and closed at 27,174 levels, around 50 points up from the lows. But still, we have closed 0.62% lower compared to previous preceding trading session. Now, in today's trading session, how the FINNIFTY is expected to trade. So overall, the support for us would emerge at 27,100 levels. So if you see any recovery or buying interest emerging around the day's open, then that should be considered as positive, and then FINNIFTY is expected to approach the highs of yesterday's trading session around 350 levels, 27,350 levels. Else if 27,000 would act as a strong support, and below that 26,600 from where the rise continued. So overall on FINNIFTY also the cautious stance has to be taken. Let's see from the perspective of open interest. So there have been quite action, typically a positive action that is emerging in between 27,000 levels to 27,500 levels. There have been some unwinding of positions in yesterday's trade in the put writing. So this should be taken as a negative point. So if at all we start trading in the range of 27,000 further, then the call writers would significantly add their positions until 27,000 to 27,500. That in itself would act as a negative sentiment for FINNIFTY, and it would be very difficult for it to cross further 27,500 levels. We see at 27,000 28,000 levels also good additions in the open interest to the tune of 50% just in alone yesterday's trading session. So this signifies that for this overall month we might hover in between the range of 26,500 at the lower levels to 28,000 at the higher levels. PCR is 0.8, which is slightly positive. At the money is also trading at 0.81. Now let's discuss what actions the market participants have done in yesterday's trade. So FIIs on index futures have been adding short positions further. So overall net they hold 38,000 contracts in shorts in index futures. On index options they added shorts in yesterday's trade, and net shorts now are held at 21,000 contracts in index options. Proprietary traders on the other hand on index futures mildly hold short positions of 1,672 contracts, which is insignificant. Index options, however, in yesterday's trade, proprietary traders would have lost a good chunk of money because they were longs with roughly around 2.25 lakh contracts. So alone in yesterday's trading session, roughly 1 lakh contracts has been unwinded. So now only 1.25 lakh contracts are held on longs in index options. Client or retailers in index futures have been holding just 9,590 contracts. They sold off around 6,700 contracts in yesterday's trading session. So not again major or significant positions here. On index options though, so clients or retailers were in fact short to the tune of 2.19 lakh contracts in yesterday's trading session. So they have in fact unwinded their positions, short positions, and now are just holding 85,233 contracts in short. So the major profits who would have gained is the retailers or clients because of the fall that we had seen in the indices. So retailers have been smarter in yesterday's trade. Now talking about the domestic institutional investors, they have added or maybe bought equities to the tune of 3,497 crore in yesterday's trade. So a significant buying has been seen, which might lead to a continuation maybe of the uptrend in today's trading session or maybe in the upcoming trading sessions. FIIs on the other hand sold 832 crores in the cash markets. So net if we see still we are on the longs. So possibilities that in today's trading session we might continue trading longs, or there might not come a significant sell off at least. Now the last segment for us to discuss is trending or buzzing stocks. So in yesterday's trading session, Punjab National Bank had significantly rose 3.91%, to close approximately at 110 levels. So there have been a positive news for PNB Bank, majorly because across the rally was part of the broader based positive momentum seen in Nifty Bank Index. The Nifty Bank Index rebounded from the early losses and closed higher, though it was negative in yesterday's trading session. So all this reflected improving investor sentiment towards banking stocks. The positive wave lifted most constituents of the index, with PNB being one of the leading gainers, driven by factors such as strong credit growth, improving asset quality, and expectations of a stable economic environment. Now, technically, if you look, so there have been a resistance at around these levels on PNB for a very long time, for almost like a year now. And then from there, we have been seeing a significant, jump that we saw just alone in yesterday's trading session. This positive green candle signifies that the resistance zones have been crossed now. So if you see here, we had touched here, we could not touch the line, but then at these levels itself we faded away and then continued to slide until 86,000 levels. From there a positive momentum came, and then there was a kind of V-shaped recovery what we are seeing now. Now from here on we might continue with the uptrend if at all we cross 115 levels on the higher side. So the immediate next resistance for us is going to be the same. So once we cross those levels, then there are high possibilities that we would move towards all-time highs of around 130 levels again. So overall, the banking stocks are expected to do well, and PNB further is one of the good public sector banks and have been contributing well, can also do well. Now next is SBI Cards and Payment Services. So in Monday's trade, it sharply dropped 3.86% in Monday's trade, closing at approximately 953 levels. Now the sell-off was on the back of the news that SBI Cards will be discontinuing its complimentary air accident insurance coverage. This was a significant feature on several of its premium and co-branded credit cards. And this is going to be with effect from July 15, 2025. So this move is seen as a rationalization of benefits that could make the cards less attractive to potential as well as existing high value customers. Additionally, the company also updated its minimum amount due calculation formula, due to which the new structure could potentially lead to higher minimum payments for cardholders, a change that may not be favorably received by them. That is when we have been, after this news broke out, we have started to see weakness in the stock, and this is a kind of support channel what we have drawn. So if in today's trading session we start trading below this, then that should be considered as a negative, and then sell off might continue from here until these support zones of around 800. So keep a close watch on SBI cards, because the news have not been that positive, and that would have no much attractiveness towards the credit cards issued by SBI. So that's it from our end. If today's analysis brought value to you, don't forget to hit the like button and share it with the fellow traders. For daily pre-market report updates, make sure to subscribe to our channel and hit the bell icon so you never miss an episode in future. You can also join our Twitter and Telegram channels. The links are given in the description. Thanks for watching, and we will see you in the next video.